The GST Council had recently approved what was described as a historic change in India's indirect tax system. It was announced that from September 22nd, several goods of daily use would become cheaper under the revised structure. Officials explained that the new system would now have two main tax slabs, 5% and 18%, while sin goods would attract a much higher 40% rate. According to the government, this change was expected to leave more money in the hands of ordinary people, which in turn could boost overall economic activity. A wide range of items from groceries and footwear to textiles, fertilizers, and even renewable energy products were said to be included in the rationalization. Goods that were earlier taxed at 12% and 28% would now largely fall into the 5% and 18% categories, making them more affordable for the consumers. It was clarified that ultra-high temperature milk would now be tax-free, down from the earlier 5%. Products like condensed milk, butter, ghee, paneer and cheese had moved from 12% to either 5% or nil. Staple foods such as malt, starches, pasta, cornflakes, biscuits, chocolates and cocoa-based products had shifted from the higher 12 to 18% slab to 5%. Dry fruits and nuts including almonds, pistachios, hazelnuts, cashews and dates had also seen GST cut from 12% to 5%. Sugar and confectionery items like refined sugar, sugar syrups, toffees and candies are now in the 5% slab. Other packaged foods such as vegetable oils, edible spreads, meat and fish products and malt extract based foods were similarly placed under the 5% category. Popular ready-to-eat snacks like namkeen, bhujiyas and mixtures, which earlier attracted 18% GST, had been reduced to 5%. Even waters, including mineral and aerated varieties without added sugar or flavors, had shifted from 18% to 5%. It was highlighted that fertilizers would now attract only 5% GST, down from the earlier 12 to 18%. Select agricultural inputs including seeds and crops, nutrients had also been rationalized to the 5% slab. The council mentioned that life-saving drugs, medical products and certain devices had moved from the 12 to 18% range to 5% or even nil. Individual life and health insurance policies including family floater plans, which previously attracted 12% GST, would now be completely exempted. Commonly used medical instruments like thermometers and glucometers were also included in the 5% bracket. Mass use items such as some electrical appliances were shifted from 28% to 18%. Footwear and textiles, which play a crucial role in the daily lives of consumers, had been reduced from 12% to 5%. Exceptions under higher tax slabs. At the same time, it was made clear that certain goods would remain under higher taxation. Pan masala, gutka, cigarettes, chewing tobacco, zarda, unmanufactured tobacco and BD would continue to be taxed at existing high rates along with a compensation cess until pending cess-related loans were cleared. The valuation of these products would now be calculated on retail sale price rather than transaction value, ensuring stricter compliance. In addition, all goods containing added sugar or sweeteners, including aerated waters, would be taxed at 40%, up from 28% earlier. A new 40% slab had been introduced for sin and luxury items, meaning that cigarettes, premium liquor, and high-end cars would not receive any relief. Only in special cases, such as imported armored sedans brought in by the President's Secretariat, exemptions would apply. Stay tuned to Orissapost Live to stay updated.